So here is another mistake that I have made in HBL power systems. So let's discuss what happened here. I was not concentrating while I was buying this stock. I bought it on 26th of August. On this day, you see this big candle here. The yellow line is my buying price and the red line is my stop loss. So let us look at the moving averages. So blue, green, red. So the 50-day moving average is above the 150-day and the 150-day is above the 200-day. That is one reason why I was considering the stock. That's number one. Number two, you look at this nice base. If I draw this base for you, see this is 0.1 in the base. That's 0.2. That's 0.3 and that's 0.4. So this is what I saw before buying the stock. This is what I saw. So 4 points in the base, more than 10 candles in the base. Those are the two important criteria that I look for when I'm buying the stock on the daily time frame chart. So I start counting from this point, this candle, because this candle has completed 0.1. So 1, 2, 3, 4, and so on. So 10 candles in the base minimum, which means minimum 2 weeks of consolidation. Then 4 points in the base, which means minimum 2 contractions or 2 corrections in the base. So that is why I put my yellow line at point number 3, which is my buy point, which is 677.40 rupees. And my stop loss is at 627, which is 8% below the yellow line. So that was my idea. Now, I want you to notice these notes that I have written here. Now, this was written before I bought the stock. Okay, this is very important. So the 97 that you see here, this is the earnings strength, the EPS rating of the stock. What this means is that HBL Power Systems has an earnings track record or earnings growth or earnings stability, which is better than 97% of all the stocks in the Indian stock market. So very good EPS rating. Then you have price rating, which is 81. This means that HBL Power Systems is doing better than 81% of all the stocks in the Indian stock market on a 52-week performance basis. That is also very impressive. Then B means accumulation distribution rating. Any rating which is A or B is fine. Okay. So institutions are buying the stock. 25 is the industry rank. So any industry rank which is less than 40 is fantastic. I prefer the rank to be less than 20. But here in this case, it's 25, so that's okay. This 82 is the master score. Master score means combining all the fundamental and technical factors. What does MarketSmith think about the stock? So that's the rating. They think that the stock is doing better than 82% of all the stocks in the stock market when you combine multiple fundamental and technical factors. So everything is impressive. Quarterly EPS growth 54%. The recent quarter growth compared to the same quarter last year was 54%. Very impressive. 11% sales growth, again very impressive. Now D means daily time frame chart. That is not a problem. The problem is this 8 number. This is the base count. Now, what do I mean by base count? So basically, when a stock starts to go up, it doesn't go up in a straight line. It creates multiple bases, and after each base, at each base it is taking rest, and after each base it starts the next leg of the rally. So now this stock is already in late stage. See, base 1 and base 2 is called early stage bases. Base 3 would be middle stage. Base 4 and 5 would be late stage. So anything beyond 5 is very late stage base. Okay. This is a factor which I have written down, but I did not give much weight to this factor because all other factors were in my favor. So I said, okay, if all the other factors are in my favor, probably that's the reason why the stock is going up. So even if I'm buying late, so what? So in this case, I knew before even I bought the stock, I knew that I was buying very late in the rally. I knew that the stock could come down. So I took a small position size. I took 5%. I did not put like 10-15% in the stock. So that is something that I did right in this case. Look what happens next. It goes a very impressive run. Volume is uh, I would say 4 times more than average daily volume. But you see high volume, weak closing candle. Weak closing means the close is below the midpoint of the candle. So whenever you have high volume, weak closing, that means there is supply. Institutions are probably selling the stock. Okay. Otherwise, this much high volume would not come from retail traders. So institutions are probably getting out of the stock. It is not outright dumping because on that day the stock was up 2.94%. So they are not dumping the stock. Maybe they are booking some profits here. So when I saw this high volume weak closing candle, I immediately sold out 50% of my position because this is not what I expected. And this candle proved that I am really buying late because normally if I'm buying from base 1, base 2, base 3, normally the stock doesn't come down, or even if it comes down, it quickly recovers. In this case, it went up very good distance from here coming down all the way 8-10%. That is not what we expect from a breakout. A true breakout is where on high volume the price sustains way above the yellow line, especially if the volume is this high. Okay. Not if you see, not in recent days the volume has never reached this level. So if that's the level of volume, then why is the price not performing? Why is the price coming down? So as you can see, this almost at break even. So I closed out 50% of my position at break even. Now I am down to 2.5% position. Yesterday this happened, so I sold another half. Now I am down to 1.25% position. So you see, every time the stock doesn't confirm my view, or every time the stock doesn't do what I want it to do, I am selling half. So my although my stop loss is at 8%, but if I'm cutting my position by half, I'm immediately cutting my total risk to 4% instead of 8%. And then when I sell another half, my risk further reduces to 2%, right? So my style of reducing risk is by reducing the position size. It is not by moving the stop loss up, because moving the stop loss up means there is a risk of getting shaken out of the trade. The stock will come down, hit my stop loss, and then it will go up. That is not what I like to see. I like to cut my position size so that the remaining shares I can hold with the same stop loss without having too much risk. So the moral of the story in this is that even though all the factors are in our favor, and even if one factor is way outside our normal parameters, we should be very cautious. Number one, we should go in with a small position size. Number two, the moment we realize that the stock is not acting right, or it is not doing what we expect it to do, we should immediately accept our mistake and start reducing our positions very fast. See, by the time these two candles closed, I already closed 75% of the position. But if this candle had closed near the high, I would have stayed in the stock. There was no need to sell. Probably I could have waited till the stock would dance around near this yellow line. I would have waited for that time. I would have had more cushion if the stock had closed here. But that did not happen. That's a clue that the market is giving me. And I quickly realized that even before buying, I knew there is something wrong with the stock. Everything looks right about the stock, but one factor is like an outlier. Okay. Now, coming back to this page, this is the Market Smith page of HBL. So if you want to see those 8 bases, see earnings and everything looks fantastic. So if you want to see those 8 bases, see if I go to the weekly chart, see I will show you. See this double bottom here, this green line. If I click here, see these two squares open up. See these two rectangles open up. If I keep clicking here, so in the top rectangle, you will see double bottom stage 2. What does that mean? Stage 2 means basically base 2. So let's go here. This is a flat base. So if I click here, anywhere in this area, if I click here, see it shows tight area. So probably that is considered as, see, this is considered to be base 1A. 1A means base 1 by point A. This is base 1 by point number 2, consolidation 1B. So this entire area is base 1. Then you have a double bottom. If I click here, that is double bottom stage 2, means double bottom, which is base number 2. Then you have a consolidation. This is stage 3. Then here you have stage 4. Then here stage 5A, 5B. There are two buy points in base number 5. This I will discuss with you later. I will make a separate video on how to identify this. Then you have base number 6, which is cup with handle. Then base number 7, and then base number 8. You see this green line here. So MarketSmith is such a fantastic platform. It plots everything for me. I don't have to do anything. And these blue dots indicate that the relative strength line is making it's making 52-week highs, okay, on the relative strength line. So if you see base 2, okay, from base 2, the price here was around 40. Now the price has crossed 600. So you see the from base 2 till base number 8, the stock has gone up 10 times. So base 2 was in 2021. This is 16th April 2021. The buy point came in 14th of May 2021. So it's been 2022, 23, 24. It's been 3 years. So in 3 years, this stock has gone up more than 10 times. Okay, and still it continues to go up. So if the stock has already gone up more than 10 times, if it has already created 8 bases on the weekly chart, obviously if I'm buying at 40 is always better than buying at 600, right? So how far can the stock continue to go? It can continue to go up as long as these earnings hold up. But you see here the earnings have gone down from 238 to 98, from 98 to 53. The sales have gone down from 81% to 52 to 12. So the sales growth rate is declining. Earnings growth rate is declining. I am buying late in the stock. The stock is already up more than 10 times in 3 years. Okay, that's a fabulous return. So these are the finer things that I did not focus on. Okay, there are fundamental and technical factors here at play. Although I bought at the proper price where I could see good consolidation. See on the right side, you see nice tightness here. So although my buying point was correct, but the context in which I was buying the stock was not correct. Okay, that's where I missed out. So I hope you understand what I am looking for when I am buying the stock, where I am making the mistake. And I hope you learn from this and avoid making this mistake. It pays to look at the overall context. Where are we buying the stock actually? If you want to hold a good position in the stock, say for example, you want to hold the stock for the next 6 months, 1 year, then this kind of holistic analysis makes sense. However, if you are a pure swing trader and you see something like this, you should start quickly cutting your position. It doesn't make sense because the stock is not doing. And if you're a pure swing trader, maybe you sell half of your position when the stock comes here to try to capture maximum gain, knowing the fact that you are buying late in the base. So as a swing trader, the approach would be different. As a position trader, the approach would be different. So you have to be flexible. You have to look at all the factors and decide what's your plan for the stock. My plan in this stock when I bought was not to take a swing trade. My plan was to take a position and sit with the stock. But I ignored this critical fact here that I am buying at the 8th stage. Anything above 5, anything above 5th base is too late. 4th and 5th is late. 3rd base is middle stage. And 1 and 2 base is the ideal time to buy. The best time to buy the stock was at 40 rupees, not 600 rupees. So you understand what I'm saying. So please don't make these mistakes. Okay, learn from my mistakes rather than giving your money to the market. So if you have any questions, comments, discussion, just let me know in the comment section. And plus, please share this video. The YouTube channel that I have created, this requires more audience so that this video reaches like-minded people like you and me. Okay. Thank you so much.